The US dollar showed a negative performance on Friday as investors regained some appetite for risk amid cautious optimism about the results of a drug trial and Trump's plan to reopen the US economy. US President Donald Trump gave a roadmap on Thursday for recovering from the economic consequences of the pandemic, laying out a three-phase plan to restore normal activity in places with a low transmission of the coronavirus while keeping restriction in harder hit areas. The US dollar index, which tracks the greenback against a basket of 6 other currencies, edged lower to end at 99.72 on Friday, posting a slight 0.2% gain for the past week. This week, the index is fading Friday's pullback and resumes the upside. Speaking of Trump's plan details, its Phase 1 recommends strict social distancing for all people in public, with the gatherings more than 10 people to be avoided. In Phase 2, people are encouraged to maximize social distancing where possible and limit gatherings to more than 50 people. Travel could resume. Phase 3 envisions a return to normalcy for most Americans, with a focus on identification and isolation of any new infections. Meanwhile, sterling showed a little movement last week, finishing at 1.25 on Friday amid the dollar's weakness. The British pound posted a 0.3% rise for the week. This week, the UK currency is losing ground amid the greenback's momentum. The US economy is showing serious signs of strain, but the UK economy is in even worse condition. The dollar remains the currency of choice in the current crisis, while sterling will be hard-pressed to hold its own against the US dollar. In the meantime, another encouraging event last week was partial data from a clinical trial of experimental drug remdesivir, which showed that severe COVID-19 patients taking part in the trial recovering quickly. However, the data is incomplete and should never be used to draw conclusions about the safety or efficacy of a potential treatment. Still, market participants were cheered by this news. Meanwhile, the euro edged up to close at 1.0878 on Friday. Still, the common currency posted a weekly 0.5% decline against the dollar. This week, the euro has been one of the currencies hard hit against the greenback, following a report that the European Union may need to triple the amount of aid currency proposed to tackle the coronavirus crisis. The Eurogroup has made proposals for aid worth more than 500 billion euros to help small and medium-sized businesses. Elsewhere, in the crypto market, Bitcoin fell by 1.87% on Sunday, partially reversing a 3.17% gain from Saturday. Bitcoin ended the week up by 3.13% to $7,133. Analysts don't have a strong view about the cryptocurrency in the short term, predicting it could swing between $5,000 and $9,000 due to a variety of forces like the demand for the USD and the hype around upcoming halving. In commodities, oil extended its slate on concerns that the world is rapidly running out of places to store crude after output cuts proved insufficient to cope with the plunge in demand. Thus, global benchmark Brent crude for June delivery climbed by 0.9% to $28 a barrel on ICE Futures Europe. It fell by 10.8% for the week. Meanwhile, May futures contract for WTI plunged on Friday to $18 a barrel on the New York Mercantile Exchange, its lowest settlement price since early 2002. WTI contracts for later delivery trade at much higher prices. The June WTI contract lost 2% to settle at $25 a barrel. The divergence between Brent and WTI results from the view that Europe is ahead of the US in terms of the timeline for reopening its economy. In the meantime, gold futures fell by 1.9% on Friday to settle at $1,698.80. For the past week, gold lost 2.4% as investors remained optimistic that the US economy might reopen soon. You are watching Currencies and Commodities Market Review on InstaForex TV channel. We wish you profitable deals and stay tuned with us, subscribe to our channel and see you.